All right, what's up, everybody? We are back with Outperforming Opinions. This is Taurus, and I have a very, very special guest with me today, Professor Swings from Twitter. Professor, why don't you go ahead and just give us a little bit about yourself?
Yeah, what's up, everyone? So I'm Professor Swings. I've been trading stocks for about 3 years now. I usually post all my plays on Twitter. I'm in a couple Discords at the moment as well. And yeah, I just like to help out.
Yep, so Swings and I today we're going to be talking about probably one of the hottest names over the past 2 months, Wish or ContextLogic. So this has been a kind of turned meme stock because a bunch of the big gurus got behind it and stuff like that. But we'll go through and in the next 30 minutes we'll tell you why we think there's actually a little bit of substance behind that and why it's not just another crappy meme stock. All right, so right now what we have pulled up just to start off is the investor presentation from after they reported Q1 earnings. And then we also are going to be talking about their Q2 earnings and kind of what went wrong there, as well as just any general points about the company. And I know, Swings, you did want to take a look at the chart as well, right? I
Yeah,
saw
I
you
did.
tweeting about that. So yeah, we'll make sure that we pull that in as well. But without further ado, we'll just get right into it and kind of talk to you guys about what we think about Wish. Right out the gate, Swings, do you have anything that you kind of want to talk about or touch on?
Not at the moment, but I'm sure a lot of stuff will come into my head.
Okay, perfect. So as you guys know, Wish.com, or you might not know, but essentially what Wish.com is it's, I like to think of it as kind of like an Amazon, but it's a little bit more unregulated and a little bit lower quality. They have a penchant for a lot of people, you know, associate them with like counterfeit products and not as high quality products. So like you can buy fake Yeezys on there for like 26 bucks and things like that. So they don't have the best reputation, but they have been taking leaps and strides to try to kind of clean up their image. They've been adding more C-suite positions as well as focusing a little bit more on quality. You can see that in practice with their margins kind of decreasing a little bit because they're focusing a little bit more on higher quality goods that carry those higher costs with them. But bottom line here, guys, is this is still a massive company. $2.5 billion in revenue for just the year of 2020. That was growing 34% year over year from 2019. This is not a small company, and their valuation certainly doesn't fall in line with the amount of money that they're pulling in. They're in 100 countries, as well as they have something called Wish Local, which we'll get into a little bit later. But they have over 50,000 local partners in that specific program, as well as 550,000 partner merchants that operate on their website. So, kind of looking at their first quarter results, I don't know about you, Swings, but their first quarter results for me were absolutely a knock out of the park. I don't know if there's anything you wanted to touch on.
So this doesn't really correlate to the first quarter results, but I was gonna say basically like Wish is like the Dollar Tree version of Amazon, but as like you said, like they're trying to get into higher market products, and obviously it's gonna make them spend more money and stuff like that. But like pretty much Peter Zulcevsky, I'm not sure if I said his name right, but the CEO of Wish, he's like the first Canadian billionaire, and I think he might be the only Canadian billionaire to own like an e-commerce type of platform as well. But he's basically following like all the steps Amazon did when they were first starting out, besides like selling books. And
Yeah,
I think that's a really
that's
good like goal and like plan to follow.
yeah, that's actually a really good point you bring up here. We talk about, and a lot of people also, Swings, I'm not sure if you're familiar with Jumia, but a lot of people talk about Jumia as well and say like, look, the e-commerce kind of business model has been proven by Amazon and Alibaba as well as C Limited, so it's out there, and it's fairly easy to replicate in terms of it's still very challenging, but it is easy in the sense that there's already a tried and proven couple of methods that have proven to work in the marketplaces. It's just about finding what works in your specific, uh, target markets. But
Mhm.
I think that's a very important point that you bring up. That hey, look, Wish can kind of point to these other companies and say, look, they've done it before, and we're just trying to do what they do and get big enough to the point where they either buy us out or we can start achieving some scale here and start reducing costs and increasing those margins.
Yeah, and like you said, like the buyout, I personally don't think Wish would get bought out because I'm not sure if it was like within their first year of going like being a company, or if it was before they even went public or anything like that. But didn't Amazon try to buy them out for like 10 billion or 5 billion?
Yeah, it was Amazon and Alibaba both offered them 10 billion and they rejected both.
Yeah, and
So,
then
and the interest is there, but I think you're right. Like, if they rejected them one time, they may not reject them, or they may reject them again.
and going to Alibaba, Jacqueline Reese, she used to work at Alibaba, and now isn't she the executive chairman at Wish?
Yes, I do believe so.
Yeah, so like I don't know, like we have a lot of good staff on Wish, so like I know they're all gonna like. I have really big expectations for the company personally.
Yeah, and if you look at these first quarter numbers here, they are pretty outstanding. I know I'm gonna jump real quick over here and look at these second quarter numbers. They weren't nearly as hot, um, and they never really kind of did examine and go through why, other than just talking about focusing on higher quality products and um, kind of blaming the supply chain a little bit. But I think that I don't necessarily. I know this was kind of a shock for a lot of people. Their Q2, but year over year, they're still looking at a lot of strong numbers here. Like if their top line 25% year over year is still very strong, and it looks like their logistics revenue is also increasing very rapidly. So I mean, there is some silver linings. I know a lot of people freaked out, especially because it had gained that meme reputation, um, and there were a lot of weak hands in there that wanted to be flushed out as soon as you know it wasn't all sunshines and rainbows. But I do think there is some positivity out there, and I think that, like you're saying, there's a bright future for this company. Um, it's just you can't expect a growth stock or a growth company to beat every quarter. There's going to be some ugly
Yeah,
quarters. There's going to be some unintended losses and unexpected bumps in the road. But that's part of being an investor in the long term.
hmm
You kind of just have to buckle up and be ready for the ride.
especially with a growth stock. Like I'd never bought this stock with the intention of holding it for like more than a month, or for less than a month. I mean, like even all my core positions, like I've always averaged down. Like I plan on holding this for at least like 10 to 15 years. And even with like my short term price targets, like those ones I'm still holding for like about a week at a time. So
Yeah, that's a great point as well. I was in the same boat. As I did more and more research and dug even deeper into this company, because I originally got it on a technical swing, and usually when I do my technical swings, they're a couple weeks, maybe a month top, and it doesn't really require a lot of like fundamental due diligence on the company, right? We're kind of just looking at the
mhm,
chart and reading the chart. Um, but as I kind of started to learn more about Wish and um, started to dig a little bit deeper into kind of the potential here. Yeah, boy oh boy did I change the way that I was going to approach this trade. And viewed it a little bit more as an investment. Definitely a lot of risk here, you know. That's kind of what we've been talking about already, but definitely a lot of risk associated with e-commerce names because, there's a lot of kids on the block, and especially if you're competing with Amazon, that's always it's always not the best thing to hear for an investor, right?
yeah.
Because Amazon does have a penchant for kind of crushing competition. But all in all, I still think it's very awesome opportunity here. As you guys can see, looking at this TAM. So TAM stands for total accessible market. Um, 6.3 trillion is what they're expecting by 2024. That's going to be the estimated global e-commerce TAM, right? So keep in mind, this isn't the accessible market that Wish thinks that they're actually going to get. Down below here, you can see this is the piece of the pie that they're expecting to get. But, excuse me, as you can see, I mean, if we're talking 6.3 trillion and that's the size of the pie you're getting, we're still talking, um, you know, tens of billions, maybe even hundreds of billions. So that's still a lot of cheddar to be pocketing. bringing in. This is kind of talking about the value conscious aspect of Wish, right? So they originally started as a place to get goods at lower prices than competitors, right? The one gripe with them long term has been the delivery takes quite some time, right? And I'm sure we can all understand why that is. If you're getting lower quality products, perhaps counterfeit products, especially if they're being shipped from China, that can take quite some time to get to the US. They're talking about this. So actually, I think this is a really good slide to kind of go into that Wish local. And I'm still personally, I don't know, Swings, if you fully grasp the way that Wish local works, but I'm still kind of wrapping my head around it.
I'm with you on that boat. Like, I'm not 100% sure how like the whole functionality of it, but I see like some of the points they're trying to make with using it.
Yeah, I think it's just a way for them to increase their footprint, in local markets and drive a little bit more customer retention, just to make delivery methods a little bit quicker and things like that. Trying to take a page out of Amazon's playbook here. But it is something that's very exciting, and they speak very highly of it. If you listen to the earnings calls, they have a lot of promise and potential in that particular offering. There's a lot of hype around Wish Local and a belief that it'll drive, a lot of retention and continued growth. I think
I
that's very
wonder.
impressive.
Yeah, it says so. Like the average user spends 9 minutes plus per day on like the Wish platform. I don't know what like Amazon's is or like Alibaba's, but I'm curious to see like what their average amount of time is spent on their platforms in comparison to Wish. I'm gonna assume like Amazon might be like, I'm gonna go with like 12 to 15 minutes maybe.
Yeah, I'm not sure. We'll find that. We'll throw it in the comments.
Mhm.
But yeah, that would be a very interesting stat to pull up because I'm actually shocked that it's as high as it is, frankly. 9
Yeah, so
minutes
am I.
spent per day. But another stat that actually really speaks to me on this slide is 70% of the sales on their platform do not involve a search query. So when you think about kind of like, and I'm sure, Swings, do you use Amazon? I'm sure you do, right?
Yeah, that's one of my main sources of
Yeah.
like buying online products from, to be honest.
So I think that one of the things that Amazon does really, really well is they've kind of mastered the art of impulse buying. They've mastered the art of putting things in front of your face at a price that you're willing to kind of just without contemplating just buying, right? I think that's something that a lot of e-commerce sites are getting really good at. It looks like Wish is getting really good at it too, because if 70% plus of their sales are coming from things that people aren't even technically searching for, right? And now part of that, keep in mind that part of that is because a lot of their things are under, $25. So it's pretty easy to just make a split second decision when the cost isn't that high. But that is pretty good if they're doing a good job of like product marketing to their customers, that a vast majority of their sales are coming that way. So this is talking about their service called Product Boost, right? So this is essentially advertising that helps amplify like a specific merchant's reach, right? So like think about Amazon has like merchants, so people who sell things on Amazon, and then they obviously have the customers, the people who are buying them, right? Same thing on Wish. Wish has merchants, and Product Boost uses an AI matching system and other AI technology to essentially drive products where they think they're going to get the best retention and where they're going to get the most impressions. So as you see on the right here, VIP Outlet, who's an electronics merchant, has seen, a 484% increase in impressions. And then a family brand merchant called Keyworld has seen a 69% increase in impressions. So as you can see here, Product Boost is helping a lot for the merchant side.
It it also said that Keyworld had 5 times the sale increase. Like, if you really think about that, that's going from 1,000 a month to 5,000 a month. Like, it's a big
Yeah,
jump.
yeah, that's massive in terms of like month over month percentages. That's absolutely
Yeah.
crazy. We saw on their in their Q2 that their logistics is increasing a lot. And this is something that we did see a lot with Amazon as well. Um, Amazon started shifting and offering their wide distribution channels as kind of a service, a logistics service to other companies that are struggling with delivery and distribution and just logistics in general. So I think that this is just another example, right, of Wish kind of walking in the shadow of Amazon, which when you're thinking about e-commerce, there's nothing wrong with using a proven business model and following a template, right? This is not anything. E-commerce is not proprietary. It's not like, well, some of it is, but it's not. What I'm saying is that you're not really reinventing the wheel here, right? Like e-commerce is e-commerce, and there's a certain set of building blocks that everybody kind of has to follow. This is Wish Local here. So essentially they're explaining it. It gives like storefronts, warehousing, product verification. It's kind of their catch-all win-win-win. Everybody wins, including Wish kind of thing. And they're starting to focus on it more just because it increases foot traffic, it increases sales, and it helps get those merchants some more reach and discovery. So as you can see, their core marketplace is still driving a large percentage of their revenue, but logistics is rapidly growing. And product boost is something that, it has a lot of value to merchants, but in the grand scheme of things, it's not going to be a huge driver of revenue. And that's completely okay. So their CAGR, this is a cool slide because we kind of get to look back and see how they performed in the previous 5 years, as well as I'm sure they have a slide, and a couple of slides at least, that talks about future projections. And we can kind of see how that didn't necessarily pan out in 2021 Q2. So they're talking about their margin here, still not profitable on an EBITDA basis, which completely fine. They're a growth company. Shouldn't expect that for a while. I mean, Amazon wasn't profitable for what, like almost 20 years after they started.
Yeah.
So that shouldn't be a huge worry as long as you're moving in the right direction and you're not stagnating. That's okay. Okay, so here's the financial outlook and long-term targets. We'll finish up with this slide. As we can see, so let's compare what their targets were to what they got. So 715 to 730, and they reported 656. So that was a pretty bad miss. And then their adjusted EBITDA wasn't a horrible miss. They only missed it by a little over 10%, which 10% kind of is a eh. It's definitely significant, but it's not a horrible miss. Revenue growth at 25%. That just means that they're a growth company. Gross margin is pretty aggressive. I would not anticipate that to actually happen. I'll probably see 60% or 55% is more reasonable. Sales and marketing, they do spend a lot of money on sales and marketing. I think that's one of the things that a lot of people have a big issue with them on, but you have to get your attention somewhere, especially when you're not as big as Amazon, right? So I know which team in the NBA is it again that has Wish on their jersey?
The Lakers.
Yeah, it's the Lakers. So I imagine that a sizable chunk goes to that because a lot of people are buying LeBron jerseys. So I think that's definitely kind of the reasoning behind that. Yeah, so I think this is a good place to stop on this presentation. I don't know, Swings, did you have anything you wanted to add before we kind of went into the chart aspect?
No, I think we covered most of like the fundamentals and like about the company. So I'm a big technical guy. Like I usually only trade stocks on like a technical analysis point of view, but within the last like 2 to 3 months, like I've been trying to go more in like fundamentals with my technicals, and I've been seeing like some pretty high success rates from that. But so from looking at Wish's chart right now, we could see that. So this is the 1 day chart. So the last close we had was like right at the resistance line, but it's like about to break out of it. So with like all the current things we're seeing right now, like short squeezes and like meme pumps, like Wish is definitely becoming a meme as much as I hate to say it. Like we're definitely in it for like the long term aspect, but a lot of like new investors are kind of just going on it with like AMC, GME, BB, like all those stocks pumping. So I personally think that Wish is going to get right above that resistance line. And then once we get to around like, what is it, like 750, I think, and the gap starts, I think the pump is going to bring us to that gap. And then once people start seeing that we're in the gap fill, it's just going to keep filling up until we get to about like, I think the 50 SMA is at what, 820 or something?
Yeah, your 50 is at 1006. Your
Oh, I mean the 20,
20
the
is
20.
at 828. Yeah.
Yeah, so I think so the only real resistance level I'm seeing is probably going to be that 20 SMA. I think once we start the gap fill, we're going to have like maybe like a 1 day pullback at the 20 SMA. And then once we get like slightly above that, I think that gap fill is going to fill like within like 3 or 4 days. And once that gap's filled, like I know more people are going to like start calling out that stock again. And honestly, I could see Wish being like $20 by the end of 2021
Yeah,
and going up to like that
definitely.
second resistance line. I feel like a lot of people don't really pay attention to like what events we're having for like e-commerce. Like we have Cyber Monday coming up. We have like I'm not sure if it's like a big thing, but I know like where I'm from, a lot of people buy like Thanksgiving gifts and stuff like that. So we have like Thanksgiving, Cyber Monday, Black Friday, Christmas, birthdays. Like there's a lot of holidays where people are going to be spending like a good amount of change like on online products and gifts. So I think once we fill that gap and like get closer to like Black Friday, and Cyber Monday, we could start seeing a pump down to 20 or pump up to $20.
Yeah, I think that I agree with most of that. I agree with all of it. The only thing I'm gonna add here is I think the Armageddon line here, right, is kind of like first. I completely agree with Swings here. We need to fill this gap. That's first things first. I think it's very bullish, as he's saying. You look at this downwards trend line. The fact that we bounced off of it, but we still held that point of control above that close on Friday is very, very bullish. As long as we're chilling around this point of control, I can see it being kind of a short-term support until we break this trend and start to push back towards that gap. Now, I think long term, the Armageddon line right here is the 15. I think this stock with the meme potential and the meme interest it has now, right? With this stock, if you get above this 15 mark, another thing to keep in mind, right, is a lot of these institutions that bought in IPO and stuff like that. Kind of looking to the left here, they all bought like up here, right? So there's a lot of institutions looking to kind of try to get out, break even. They might have been even averaging down here if they're bullish on the company. We have seen a lot of institutional ads on Wish over the past 6-8 weeks. So I do think that if this 15 breaks, I mean the sky is the limit for where this could go, right? If it still has that interest when it does that, the fact that it's tried to break it 3 times and it hasn't successfully broken and held it, if it were to break and hold, I think it would be very bullish. Um, Again, I agree with you. I think we could see 20 plus end of year. But the biggest thing is it has to get over that 15 right now. The 15 is kind of the end all be all for this stock. Until it gets over that bump, it'll be hard to kind of push through. I could definitely see with like the winter volume pickup that we usually get. Um, I could definitely see in the winter time, so like maybe November or even late October, kind of around that timeline you were talking about swings with Thanksgiving. Um,
Mm-hmm.
I could see some strong volume push above this 15, and then we're off to the races. I mean, it could be. I'm not even going to throw out numbers because it's impossible to tell the interest and the volume that it carries. But I do think, like you're saying, 20 is perfectly reasonable. That seems to be the only realistic, somewhat resistance over 15. So
Mm-hmm.
I'll just go ahead and copy you on that and say I could definitely see at least 20 by the end of the year, but we do need to see a bullish exit from this downward kind of
Yeah.
trend line here, and we do need to start to see that first gap fill.
So one thing you mentioned that I completely forgot about was like all the investors, like Peter Thiel. I'm pretty sure he invested like at $26 or something like that, and I do believe it was like 50% of his portfolio. So the way I look at it is, if Peter Thiel could be down millions and millions and millions of dollars and still have all this faith, and he's rich, like he knows a lot more insider info than us, as much as like they're not supposed to. If he could be holding all the way from up there to down here, I could definitely hold with my $10 long-term core position.
Just basically, if you pull up and you look at the institutional buys and sells, you'll see that there's some big name street funds and people that are, putting their money where their mouth is as it relates to Wish. Kind of a good segue there for the last part of this discussion, which is the, FinTwit presence. We've seen, obviously, Zach Morris is kind of the one who ignited this fire in the FinTwit community. And, there's always positives and negatives about a stock getting ignited in FinTwit, right? I think Morris has spoken about it himself when he said, it definitely, it starts to accelerate the moves. And when you accelerate a move in the stock market, sometimes you don't necessarily get the reaction, right? It gets a little overcrowded, and a lot of those hands are weak hands. And so, if everybody's following a thesis, then they don't have their own conviction, and anything goes opposite of what they expect, then they're pretty easy fold candidates. So, I think that the FinTwit presence on this stock is definitely part of the reason why it fell as hard as it did. And I do think that it might be part of the reason why it revives as hard as it does as well. But, the smart people on FinTwit are calling this out, both technically, both fundamentally. So, I'm not the happiest about the fact that it's a meme stock. But it does give me a little faith that, if we do see some positive volume here, it should start running hard, just because it's on a lot of people's radars. I don't know if you want to add anything to that about the FinTwit community as it relates to Wish.
So I definitely think having like Wish like all over Twitter is like really good, but the only bad part about that is that it's going to get overcrowded, and that's what happened the first time. We couldn't break like the 1550 wall, and then like everyone started playing short positions on it because we didn't want to we couldn't break above it. I kind of feel like that might happen now, just with like all the memes going on and like Wish becoming a meme. But I don't know, like we saw AMC go from $2 to 75 within like 3 months. And I'm not saying Wish is the same thing as AMC, but I definitely know like the meme, like all the meme apes, they definitely know how to play their part and hold the stock. So if we could just hold where we're at right now and get above that resistance, like diagonal line I had you draw, I could definitely see this thing going up pretty fast.
Yeah, absolutely. I think there's a lot of positives on this company moving forward. There's a lot of growth. We kind of looked at one thing I'll finish up with real quick is when you look at the revenue as it relates to the market cap, right? They're sitting in a market cap right now of 4.1 billion with, sales of 2.83 billion. So when you start looking at multiples and stuff, that gets pretty small multiple when you're comparing them to Amazon and stuff like that. So at these prices, I think it's horribly undervalued. I think Swings, you would agree with me on that.
I would.
But I just think that, this is a good position to start to think about entering Wish if you haven't already, or potentially even averaging down if you wanted to be aggressive. As for me, I'm happy with the cost I have, and I'm just going to, continue holding and continue to learn more about this company as I am an investor. So, Swings, did you have anything you wanted to wrap up with, or
I'm just excited for like what this thing does within the next like 3 to 5 years. I just want to like skip time, but I also don't. You know what I mean?
I know exactly what you mean. But yeah, I think that's a really good way to wrap it up. There's a lot of excitement. If you guys liked, this new type of outperforming opinions episode, right, with having a co-host, then let me know down in the comments below, and we will get working on some additional guests in the future. Swings, thanks so much for joining and talking to us about Wish. If you guys really like this video, make sure to like and subscribe, all that YouTube stuff, and turn on that bell if you would as well, so you can get notified and be one of the first people to watch the videos. We might have some giveaways for the first couple of people on the next couple of videos. So really appreciate it, guys. Thank you so much for watching this video, and we will see you on the next episode.